younger generation investors do not view gold the same way that my parents or grandparents did. There are still very few kind of breakout examples of how blockchain, can or will be used for non-speculative, non-financial use cases. The thoroughness that you see in other asset class research does not yet exist. If history, repeats, which it doesn't always, but if it does, you would expect that the all-time high of 20,000 will be taken out in this next run.
At the very beginning of Real Vision, we cared about cryptocurrency. We thought there was a future in it that was going to be an important future of the financial system. And we've gone through some booms and busts, but that whole narrative is still very important to me personally, and I think to Real Vision and to many of you in the financial world. We know it's not going away. And one of the first guests we ever had on that brought us into this crypto world was Barry Silbert. Barry's an old friend and he's a great thinker in this space. He understands the juxtaposition between financial markets and the digitization of assets and cryptocurrencies and blockchain and all of these things. He's been a pioneer in the field and it's super nice to get him back on so we can just kick around the tires of the space and really see what's going on. It'll kind of build on from the Mike Novogratz interview that we did back in October, where it starts to build on the story of where this is really going now. And as we know, this is not a very straightforward journey. It's a very complex world we're developing here, but an exciting one. But one of the key things is Barry started an advertising campaign that to many of you is going to be the worst thing ever. It's questioning the value of gold and raising the value of cryptocurrency versus gold. And I think just to start off, I want to show you that commercial because it's going to get some of your blood boiling and others thinking, yeah, this is dead right.
Why did you invest in gold? Are you living in the past? In a digital world, gold shouldn't weigh down your portfolio. You see where things are going. Digital currencies like Bitcoin are the future. They're secure, borderless, and unlike gold, they actually have utility. Leave the pack behind. It's time to drop gold. Go digital. Go grayscale.
Barry, good to get you back. We figured out just now that it was December
2014, December 11th. December 14.
Wow, so it's a long time ago because as you know, we've been massively big supporters of crypto, blockchain, the whole thing, and you were really kind of almost our entry into that world.
That's right. You guys, I think, had just launched, right?
Exactly, 3 months prior. Yeah. And so where was Bitcoin then?
350 or so.
And where's it today?
About 8,000. So I got to rewatch the interview and I guess we'll do a victory lap right now and say I was probably pretty right.
Yeah, I think you can say that. And that's with a huge spike up and a huge drop as well, and it's still been very right. I really wanted to get you back just to pick your brains to find out where we are. We're all on this journey, and it's a long journey. We kind of think we know where we're going, but we don't really know. So let's start with where you think the journey's going, and then we'll kind of back up to where we are now, right, and the kind of stuff that you're looking at.
Right. Well, so I think let's go back for the past 4.5 years. So in 2014, I would imagine kind of the asset class was probably only worth a couple $1 billion. Today, Bitcoin is I think worth about 125 billion. I would imagine that there were only a handful of exchanges.
In fact, your investment trust is worth now
$2 billion.
The same size as the entire Bitcoin market.
Indeed. Yeah, that's true. And
well done you.
Yeah. Good to be first mover, I guess. Yeah, so there were probably only a handful of exchanges that you could trade off of. There was no institutional involvement in the space. When Bitcoin was discussed on kind of popular media, it was always described as Tula bubble Ponzi scheme. Still quite a bit of that, I guess. And then you fast forward,
and it was also the criminal element. It was always it's the currency of criminals.
Silk Road probably existed at that point, and there was this perception that Bitcoin was only used by criminals. And so fast forward to today, it's different. I think the asset class, the asset class is here to stay. The asset class as defined as digital assets, which would include both digital currencies and these kind of token investments. So the asset class is here to stay. I think it's now being looked at as potentially an important part of a diversified portfolio. There are thousands of digital currencies and tokens that are out there. Most of them, I'm sure we'll talk more about, you don't want to touch, but there's thousands of ways to kind of play the asset class. And the infrastructure, comparing it, then versus today, you have custody solutions now, like institutional grade custody solutions. You have trading software. You have, data and analytics. You have fantastic, kind of media editorial coverage. And so I think the asset class is really ready for the next phase, which, it seems to me is institutional money moving into it. We've seen hedge funds dabbling, we've seen family offices dabbling, but the pension funds and the endowments and the insurance companies and the central banks and all the deep pools of capital haven't really touched the asset class yet. And I think that's next.
Do you not think it needs a clearer use case for them? Because there's so much theoretical use case. I mean, you and I were just talking off camera. I mean, everybody we know involved is investing in companies who have use cases, and it's kind of in that dark period of everything's being developed, nothing's really come to market yet. What do you think about the use case for all of this, or does it just become a trading asset?
So we, as a Digital Currency Group, my company, we've invested in 145 companies now. And so we're the most active investor in the space. And so we have pretty good visibility and insight into kind of what's working and what's not working. And I continue to believe that the number one use case is speculation right now. And that is not a bad thing, in that, one, I think Bitcoin is going to, controversial opinion here, is going to displace gold over the next couple decades in terms of the role that gold plays in a portfolio.
We will come back to that.
Yes, I'm sure we will. But separate from kind of the store of value kind of gold play, I think that in order for Bitcoin and digital currency to provide the utility that people are excited about from a cross-border payment perspective, remittance perspective, all the friction that could be eliminated by the free movement of money around the world, it's not possible unless the asset class, the size of the asset class is larger, unless there's more volume and velocity in the on-ramps and the off-ramps. So initially, the number one use case is speculation. As the market cap grows, you have more liquidity going in and out of different fiat currencies, and eventually you'll have the ability to operate, as an individual or as a business, exclusively in Bitcoin and digital currency, and completely eliminate or bypass the middleman and all the friction, all the cost. But none of that becomes possible. You can't create a better financial system that eliminates all the friction and middlemen when you only have a $125 billion asset class that trades $5 billion a day. It's just not big enough.
So, and that's an interesting point. So you think that speculation is one of the good ways to build the
It's the only way. It's the enabler. It's the flywheel effect. It has to grow in value, and as it grows in value, it becomes more interesting as a tradable asset. And as it becomes more interesting as a tradable asset, you get the derivatives, and you get the futures, and you get the infrastructure, and then you have the liquidity.
But the argument is what are you trading then? I guess the answer is you're trading a future operability or something. You're trading the future use case, I guess.
It was really kind of it's two things. One is if you buy into my hypothesis that Bitcoin is going to displace gold, so you're trading into an opportunity. So there's 8 trillion of gold, and then there's 125 billion of Bitcoin. So that's one play, and the other is you're betting on the innovation. You're betting on the technology. You're betting on the community. You're betting on this new financial system that is going to get built over the next couple of decades. And that investment thesis is it's a different analysis. The gold analysis is, okay, what is the probability that it captures some of 8 trillion? And then you discount that back and you say, okay, it's gonna 5% chance it's gonna happen, that it's gonna capture 25%. You could do the math, it's still a big number. Whereas if Bitcoin becomes the underpinnings of the new financial system, all of the value that gets tied up in Bitcoin as it's moving around the pipes, it's kind of like it's like a working capital analysis. And so if there's 5 or 10 or $100 billion tied up in the Bitcoin system as it's being used for all these use cases, you can make some assumption as to what the value of the asset class would be at that point. And that's not even valuing the blockchain use cases, using the database for, recording ownership around, digital rights and identity and all the crazy ideas that we've invested in and you've heard about.
So can you think of, therefore, of Bitcoin, thinking through your idea with gold and other areas, is you need to think of it in terms of option value. What is the probability of it ending up replacing gold? And then trying to impute that. My guess is you could probably apply some sort of option pricing model and come up with some fair value, whatever that means.
Right, and the small changes in your assumptions have a pretty meaningful impact on the outcome. And look, and that's why Bitcoin will move up or down 5 or 10% in a week, because the very small changes in money flows, very small changes in perception changes kind of the probability of that ultimate outcome. And so again, with gold as the in my opinion, kind of the number one use case, or digital gold, 8 trillion relative to 125 billion. I mean, for you to double your money in gold over the next couple decades, it's essentially it's a bet against the dollar. I mean, it's a bet against kind of fiat currency. It's certainly my belief that Bitcoin would perform well in that environment, but really more importantly, if the world doesn't fall apart and if the value of fiat and the US dollar doesn't collapse, Bitcoin could and should still perform really, really well, because you're investing in this new financial system, this technology, this community, this restructuring and rebuilding of the way that value moves around the world. And gold is never going to have more utility. It's just going to, or not, be perceived as this store of value that you put in your portfolio that would perform well in periods of financial dislocation.
There used to be people used to trade the gold-silver ratio for a long time. And one of the reasons why silver often outperforms in certain times is because it has two values. One is the precious metal value, and the other is the industrial value, because people use silver for a lot of stuff. And you kind of think of Bitcoin in the same way. Absolutely. It should hyper outperform in that kind of magic scenario of devaluation of fiat currency, which probably at the end of the next recession we're going to see some format of, but also it has to price in the optionality of the future financial system, which, as you go into a recession and you get to more extreme monetary policy, the probability explodes of having to choose a different outcome.
That's a super smart way to look at it. That's absolutely right. Absolutely right.
Because one of the things I've been looking at, just to cross our two worlds over, is the Japanese now own most of their government debt. Mm-hmm. In the next recession, they'll probably own all of it, which is a debt jubilee. So what happens to the Japanese yen? Probably collapses. Right. Stock market probably goes to the moon because all the debt's gone. But I don't really know what that world is, but clearly it's been happening since biblical times, this kind of debt jubilee stuff. But in that environment, you kind of think that Bitcoin has its proof. That is the kind of environment that it is absolutely there for, because at the end of that, there's going to be a huge distrust in financial system, what asset is what, how can you just write off assets?
Right.
And having blockchain and kind of the registration of assets and the storage of that data means that you actually get to own your stuff.
Right, and there's been little tastes of how Bitcoin may perform in I guess kind of smaller examples. So Brexit, Bitcoin went up. Cyprus, Bitcoin went up. Grexit, Bitcoin went up.
China now.
China, yeah. I mean, look at the past couple months, Bitcoin went up. And there's certainly plenty of examples where Bitcoin did not go up when certain things happened. But it's interesting. If you kind of think about, there's an interesting generational wealth shift that's happening that I think many investors don't take the time to think about or analyze. And so So the numbers that I saw, there's $68 trillion of wealth that'll be handed down in the US alone over the next 25 years. So 68 trillion. So the question is, as that value gets handed down from boomers to Generation X and Y and millennials, where's that money going to go? I would posit certainly that whatever is in gold, that percentage is not going to stay in gold. Younger generation investors do not view gold the same way that my parents or grandparents did. I grew up, we weren't on the gold standard. I grew up in a period of time where we weren't in war and didn't have to worry about kind of hiding value from the bad guys. And so, of the 68 trillion, whatever is in gold, is it going to all go to Bitcoin? No, of course not. It'll go into FANG stocks and it'll go into Uber and things like that. But I do think that younger generation investors are open to the idea that what they have been told or what the parents have been told about the role that gold will play in a portfolio may not be right for the next couple of decades. And if you look at the biggest buyers of gold recently, who are the biggest buyers of gold right now? Central banks. So what's interesting is gold bugs love to talk about how central banks are idiots. Central bankers are idiots. They fiscal monetary policy, they don't know what they're doing. Yet they run around and talk about how smart they are for buying gold. Over the past 5 years, the largest increase in demand for gold has come from central banks. Well, when the stuff does hit the fan, what do those central banks do with their gold? Do they keep on accumulating, or are they forced sellers? Not even forced sellers. Are they going to use that value to prop up a currency? Or I would guess that they're going to sell off their gold before they start selling off their ports and their airports and things like that. Okay, so that if the central bank demand disappears, we know in periods of recession and depression that people will sell their gold, to buy food and fund their lifestyles. And from an industrial use perspective, I didn't appreciate this until we launched this Drop Gold campaign. The use of gold in electronics is down 30% over the past 10 years. Down 30%. So sale of smartphones are up like 5 or 10x, and tablets and computers. So electronics are up hundreds of percent, yet the use of gold in electronics is down 30%. So the demand for gold is basically jewelry and it's central banks. What happens when the economy turns down? I just don't see where the buyer comes from.
Yeah, although I wouldn't even have the argument about gold. Let's say gold is a fixed value. Okay, let's assume that it is. The argument, I think the better argument is, what is the value of cryptocurrency in that environment? And I think the generational thing, I did a piece about the pension crisis. So I think part of that 68 trillion is going to get absolutely obliterated in the next recession because baby boomers are forced sellers before they even divest their assets to their kids.
Right.
They're going to be forced sellers because they need to realise some liquidity to retire on. Right? It's just the standard retirement process. And I think that kind of definancialisation that we're going to see part of is going to put that younger generation even further away from public markets and all the stuff that we kind of grew up with.
Right.
And I think they're much more comfortable with private markets. I think the VC world and the PE world and then the crypto world, the three worlds they kind of feel are more quantifiable and understandable to them.
Right, and it's also much more accessible. If you think about investing in private company stock, you have to be a high net worth investor, and you typically only get access to kind of deal flow that's kind of local to you. Where with this new asset class and these thousands of protocols and tokens and different plays on the kind of the digital currency asset class, it's global and it's accessible to anybody who has a mobile phone. And that's exciting.
And also, if you think about the set of opportunities the baby boomers had when they were in their 20s, right? They had the whole demographic wave in front of them, and they had equities by 1982 were a P of 7 in the S&P. They had interest rates at 15, 16%. So they had the best setup in history to accumulate wealth, right? Nobody's ever been given that before. You cut to the millennial now, they've got the most expensive stock market in all history. They've got a bond market that yields nothing. They've got real estate that is incredibly expensive that they can't buy. They have the absolute inverse of what the baby boomers have.
Right.
But they have one thing, and that is crypto.
Right.
Right. If there's one thing on a 30-year pension retirement horizon that has the probability of going to a huge number, it's this area.
Right.
That's the way I think of it.
Right.
Yes, there's a whole bunch of other investments and you could do VC and stuff like that. But if there's one option bet that could pay off the 1000x, it's this.
Right.
And so if you're a millennial, you forget gold because, yes, sure, gold may double. It may double again, but it's not going to have the same performance over time that cryptocurrency could if you get the right bets.
Right.
So that's how I'm kind of thinking of it. So when you're looking at the investments in your portfolio, the companies you're investing in, talk to me about that landscape. Who's doing what? Where is this going? What kind of applications?
So when I started doing investing in the space, this would have been in 2012. There were like literally 5 companies you could actually invest in. I mean, there were not thousands of companies to invest in, and so that was I invested in Coinbase and invested in Ripple and invested in BitPay and some of the companies that have gone on to be the leaders in the space. And then I've had a few, theses over time. And so for a while I was investing in exchanges, and so invested in 20 exchanges around the world. And so the hypothesis was that the dominant exchanges in any given geography or market were going to be not a global exchange. It was going to be whoever had the best banking and regulatory relationships locally. And so we invested in 20 exchanges, and the consolidation has started. Then we started investing in companies that were using blockchain for non-financial use cases, things like identity and provenance and supply chain and digital rights and things like that. A lot of proof of concepts, a lot of consulting type revenue, but there are still very few kind of breakout examples of how blockchain can or will be used for non-speculative, non-financial use cases. I'm still very excited about it, but the reality is a lot of the use cases that people have identified, they're just as well served with just a database, a shared database. So introducing the idea of a decentralized blockchain, especially one with a token, kind of slows down and complicates the proposition a bit. Then we started investing in infrastructure around trading, so compliance software and trading software and data businesses, and those are starting to gain traction now because as there's just growing demand for the asset class, investors are just looking for lots of information. And then I guess a recent area that we've gotten pretty excited about were applications around gaming.
This is the one thing I wanted to talk to you about.
Yeah, because there's this.
They seem to be leading the way in many respects. Digitization.
It's interesting. I think clearly gaming and e-gaming is an enormous trend in the world today, and the younger generation of consumers are comfortable spending a lot of their time in gaming and so what a blockchain enables you to do is create something that's called a non-fungible token, an NFT, which is essentially recording ownership of a digital asset in a blockchain. So think of it as a sword in a game or gold in a game or whatever is kind of the value, and then being able to monetize that or use it kind of cross games. So there's a lot of interesting businesses that are starting to
because this feels really tangible. I know it's not to us because we didn't grow up in gaming culture in the same way. Yeah. But seeing young people, this is a hugely tangible thing. A digital asset is a real asset to many, many people.
Yeah, it is. And the question really is, are the game publishers going to be okay with this? Because, they make a lot of their money by selling, upgrades and things within their game, and they don't want that value to be transferred, kind of like airline miles. So one of the areas that we have invested heavily, one of the projects we invested heavily in, this is going to make your head spin, is something called Decentraland. So Decentraland is a virtual world. It's a metaverse, and it's a play on our hypothesis that in the future people are going to spend more time in a virtual world, and that virtual world will likely be kind of VR, like goggles. And so Decentraland is similar in concept to, if you remember, Second Life.
Yeah.
Okay. So with a few key differences. Number one, the land in Decentraland is ownable. So every parcel of land you can buy, and you can speculate on the land, you can build on land, you can lease out the land.
Is it not infinite?
So it's not. The supply is capped, and so that's the other big difference with Second Life. Second Life was infinite, and it was a little. If you ever I logged in a few times, and it was overwhelming. There was no urban planning, and so Decentraland is a grid the size of basically Washington D.C. So you can own the land, and then there's an in-world currency called mana, M-A-N-A, that is tradable like any other digital currency. And so we have invested in mana, we've invested in land, and then we started investing in businesses that are being built within Decentraland. We invested in a company kind of building tools for people to navigate the world. We invested in, we're looking at there's a media business in Decentraland. There's a Vegas district, and so we invested in the Vegas district to help support the growth of that district. And so the hypothesis here is, if a metaverse is going to exist, if the Ready Player One world is going to exist, it can't be owned by a company. It shouldn't be owned by Google or Facebook or Apple, number one. Two is, it is a platform for discovery, meaning if you want to go ride a roller coaster in the virtual world, I don't think that you're going to go to your computer and say, show me roller coasters in VR. You'll put your goggles on, you'll drop into the world, and there'll be a AI avatar that will show you the way to the roller coasters within the virtual world. So the opportunity for landowners to monetize their land is really interesting. There's an advertising play there. You can have a whole advertising network within Decentraland.
I mean, even though it sounds extraordinary, if you just step back to stuff like some of the computer games from the 90s and early 2000s, they sold huge amounts of music.
Right.
On the radio stations and stuff like that,
Yeah.
There was huge hits made and huge revenue streams paid to a bunch of people by stuff in the digital world that cross into the real world. And just to give you an example about this, is I didn't know how to navigate this thought process. I think Mike Novogratz had mentioned this to me as well, and I didn't understand this. And then I went to a friend's house, one of my oldest friends in the world, and it was a Friday night, and his son was in a room like this, a glass room, which was their TV room. But he doesn't watch TV any longer. He was playing Fortnite.
Yep.
And he had his headphones on, and I'm like, what's he doing? He's on his own. It's a Friday night. He's like, no, he's not on his own. He's with 30 friends. And this is what they do, is they get together online, and they're crossing the two worlds of the virtual world and the real world. So like, I used to hang out with my friends at the shopping mall or whatever it was, or on the street on bikes. They don't do that, they do it online.
Exactly.
These digital things have real value to them because they are part of that crossover of digital and real life. Once I saw that, and I said, but what about, does he not get outside? I said, of course he does. He plays football with his friends and does all the normal stuff. Yeah. But this is how they kind of hang out together. And it's actually made it easier because he's hanging out. There's a friend of his from America, and there's a friend of his who lives in a different part of England, and they can all hang out together. I'm like, I get it.
And wait until they have some discretionary income, and they can start buying things.
Which he's doing already.
Right.
Because his dad, he's giving him some money or pocket money or whatever, mows the lawn, and before you know it, he buys something as a digital asset.
And this is why Decentraland is so exciting, because people are building houses and castles. They're building, for vanity and for ego purposes. They're building in this world, and they're now able to buy and own and display these NFTs that they're now buying outside of Decentraland. They're bringing it into Decentraland. And so all of the gaming applications that are being built where there's an NFT component, Decentraland could be the place where you go. The marketplaces are now popping up, so you can kind of go into Decentraland and buy and sell goods for various games that are being built on top of blockchain. It's a big idea. It's a really big idea.
It is, and I don't think it'll stick with just gaming. I think there will be whole parts of our business world and other worlds, that even the scientific world, that will end up being digital.
Right. Well,
and you own stakes in it.
Well, part of Decentraland, so there's this Vegas district, there's a university district, and so there's now universities that are now exploring how they can, engage and educate, in a virtual world.
What is the NAV of this new land?
It's relatively small. The value of the mana in circulation is probably about $100 million, and the land.
So it's not even priced at the price of a high quality game.
So right.
You know, just think of it in those terms, right?
Right.
If you just think it's nothing but a game, but quite a good game, it's still cheap, because a good game like Grand Theft Auto is worth $1 billion plus.
I think Decentraland could be as big as Google. It's a platform play. It's a platform play.
Wow, okay. So that's another question I want to come on to, is Google and Facebook now moving into crypto and privacy. You know, I'm very interested in Tim Berners-Lee's new internet, and there's a whole world where I think the internet, blockchain, the whole lot have to mix, because we need to own our own data as humans and be able to decide whether we sell it or not to others. Because basically, things moved so fast in 10 years with Facebook and all of these platforms that we didn't know what was happening. And now everyone's kind of figuring it out, and you can just see the DOJ are about to get involved, and they're all going to get broken up in the end, because they've got way too much power, and particularly way too much data, of which they own and we don't. So what do you think about that, and how's this whole world going to play out? Because I think this is enormous.
And so the next investment thesis that we have been focusing on right now is privacy. From an investment perspective, we've invested. There's only 5 digital currencies out of the thousands out there that we're excited about that we invest in. It's Bitcoin, it's Ethereum Classic, it's Mana, as we talked about, and then there's 2 privacy-focused projects. One's called Zcash, which is basically private money, and then something called Horizon, and the token is called Zen, Z-E-N. And Horizon's interesting because it's a platform for privacy-focused applications. So it's private money, it's private file sharing, it's private messaging, it's private internet access. So Horizon is something I'm really excited about, because I think it's going to play right into this important narrative, which is people they're going to want to own their information. They're going to want privacy as it relates to communication and financial transactions. But look, it's going to be I think a challenging road for any of these privacy-focused protocols, because as they have success, there'll be quite a bit of pushback, from kind of regulators and law enforcement and stakeholders like that. But look, I ultimately do think that people, while they do value privacy, they also value free Facebook, free Google, and free use of all of these different products and services. So I'm not really sure how you address the monetization question for these platforms if you start taking away from them the information that they have access to and that they've been selling.
So how do you think about this world that's now coming to light? And there's 2 parts that I'm interested in. One is how do you deal with all these currencies? What kind of research platform do you need? Because people don't really know the relative value of one versus the other, which is why it's so volatile. That's interesting. And then trying to figure out the world of all of these forks. I'm not sure what the value proposition is in terms of how do you keep hold of a value of something when it keeps bloody changing. So there's the two parts.
So I think on the question of forks and the proliferation of all these different tokens and projects, I kind of view it like it's Darwinism of money and value, and ultimately it'll be survival of the fittest. And as these various projects, and I think the idea of forking is becoming less common, because there were a few forks that everybody won, and then there's been some more recent forks where everybody's kind of lost. So I do think that it's actually a good thing to see these projects splinter, because whatever is the survivor, if any of them survive, it means that it's been tested. It means it's been challenged. And for any of these protocols or tokens to have value longer term, they have to be challenged.
But that's a hard trading environment.
Well, of course. Yeah. Well, this is why we only own 5 out of, or have any meaningful amount of money in 5 out of the 1,000.
Because you are actually having to ask individual investors to become option investors, because many of these things go to zero, and some make infinite wealth, right?
With the last fund, so Grayscale, our asset management business, we have 10 funds, and so 9 of them are the Bitcoin Trust and the Ethereum Trust and Ethereum Classic Trust. The 10th one is a large cap fund that invests across, basically it's designed to cover the top 70% market cap of the asset class, and essentially it rebalances every quarter. So we've positioned it, and I think it's been well received as kind of the first investment people can make in the space, because you don't have to try to pick winners. Basically, the bet is okay, if this asset class today is worth 250 billion,
like an index fund, always.
Exactly. So it rebounds every quarter. You set it and you forget it. Your bet is that the asset class grows from 250 billion to 2 trillion, and if that happens, then you'll make a good return.
And so if there is this trading and speculative community that's necessary for the future of this, then something which I just mentioned briefly is like, there is no research.
There's no research.
How does anybody know what? Everyone's going to torch their money if they're not careful, unless somebody applies some intelligent framework around it.
Well, yeah, actually, let me rephrase that. There actually is a lot of research. There's a lot of commentary. There's a lot of data analysis, but there's not yet an opportunity for paid research because the market's not big enough. And so I think not just the kind of the quality, but the thoroughness that you see in other asset class research does not yet exist. But there's absolutely some really thoughtful analysis out there and approaches to kind of the way to kind of value these different protocols and these different assets. But it's still it's a nascent asset class, and so some people will look at the cost of mining as having some input or impact on the price of Bitcoin. Some will look at the number of active wallet addresses. Some will look at the number of dApps, decentralized applications on a protocol. These are all interesting inputs. Are any of them kind of leading indicators? I really don't know. Our investment strategy is we don't short, we don't lever, we don't trade. We invest, and then we do everything we can to create awareness and drive utility for these protocols. And these investments, we'll have these for 10 years plus.
But I'm guessing that there's also a group of people, people like Virtue and Citadel and everybody are starting to get involved in algorithmic trading, machine learning, and that whole space.
There is, and I think there's always been money to be made in the digital currency space doing kind of cross-exchange arbitrage, but the challenge has always been you didn't want to leave money on the exchanges because while you could make a really good return with these arbitrages, you could wake up one day and the exchange is hacked or the exchange is cut off withdrawals or deposits. But I think that's changing. I think over the next couple of years, as the kind of the well-run, well-capitalized, in many cases regulated exchanges kind of emerge from the pack, I think you'll start seeing more opportunities around starting to cross-exchange arbitrage. And then now we're starting to see kind of the quants come in and the algo traders kind of come in and build their models and back test. And I'm definitely aware of kind of people making money in the space, but it's also it's not been big enough yet, for the real players to care. But we're getting there.
And how do we stamp out the bad actors? I mean, I don't know where you stand on the Bitfinex and the Tether thing, and there's a whole bunch of things that...
Well, how do you define a bad actor?
I don't know. There's too much... I guess my financial market background says I'd rather not let too many people who don't know much lose too much money.
Right.
Being taken advantage of. There was a bunch of ICOs that were basically taking advantage of people. And, yes, I like the technology, I like the idea, but, to literally steal money from people, I just think is wrong.
So I agree with you. Philosophically, though, I also think that, at least in the U.S., our capital formation process is, I wouldn't say it's broken. And we talked a little bit before about the way the public markets have changed. But today there's half the number of public companies than there were kind of a decade ago. And you have to be a much larger company to be able to access the public market. And so I think the challenge that the SEC has had is how do you do exactly what you're talking about? How do you kind of protect investors? How do you support capital formation in the public markets while trying to use the 33 and 34 Act or apply 33 and 34 Act type rules to an asset class in an environment that certainly was not in anybody's mind 70 years ago. And it's hard. And so, what's happening now is you're seeing some interesting experimentation happening outside the US. And there's certainly a risk that experimentation results in some important projects and products and businesses that are built outside the U.S. And so from like a financial capital of the world perspective, there is a risk that that's going to move offshore out of the U.S. So I don't know. I mean, ultimately, it's a.
But that's a balancing act, right?
That's what I was
It's the
saying.
same with bioengineering. There's a balancing act between what do you allow that your society will take, right? So massive fraud. In an unregulated world, massive fraud will also equal massive innovation. And that balances. But as a government, you have to choose where you are on that equation.
Right.
And it's same with biotechnologies. How much human cloning will you allow,
Right.
or at what point?
Right.
Yeah, it's a complicated world. So how do you see? So we've had a big run up in the price of Bitcoin in the last couple of months. Maybe it's China related. I don't know. Do you have any view why it's done this? So just out of the blue. And secondly, what is your kind of thought process over the next 12 months?
I think there's a few things that contributed to the price run up. One is, I think just from a technical perspective, from a chart perspective, you kind of look at what happened. You had the blow off top, you had the kind of the consolidation at the bottom, volume dried up, volume started increasing, price started going up, started taking out some resistance, and all of a sudden, you're kind of off to the races. And I think because Bitcoin has now gone through 5 or 6 80% drawdowns only to hit all-time highs after each one, I think people who've been in the space as long as I have and others, we just view what happened as a buying opportunity, and because the thesis hasn't changed, in fact, it's only become stronger. So I think if history repeats, which it doesn't always, but if it does, you would expect that the all-time high of 20,000 will be taken out in this next run.
Well, we don't know if this is the run. It could go down to 2,000 and then go up to...
True, but I think if you look at the past 4 or 5 times that it's done this, the chart looks
similar. Particularly on a log scale. I was looking at that the other day.
Yeah. So I think that was a contributor. I think the China talk was a contributor. I think our drop gold, we started a national ad campaign. So we now actually have television commercials that are, it's very much intended to be provocative around gold, but it is indirectly or fairly directly, I guess, a commercial for Bitcoin. So I think that if you look at, we launched on May 1st. The price of Bitcoin on May 1st was around 5,000. Today's 8,000. So I think maybe we created a little bit of a little tailwind. And then I think what's going to, over the next 12 months, the catalysts for further upward price movements are, number one, Fidelity is going to be launching their trading solution. The ICE and Bakkt are launching their trading solution. Rumors of TD Ameritrade making Bitcoin accessible on their platform. So you have on-ramps that are about to be launched. And then most importantly, that very few people are talking about is the next Bitcoin halving. So many people, even though the ones who are invested in Bitcoin, don't know what the Bitcoin halving is. And so here's a quick tutorial. Bitcoin is created through this process called mining. On average, every 10 minutes, a certain amount of Bitcoin is created and issued to the miners. When Bitcoin was launched in 2009, it was 50 Bitcoin issued every 10 minutes on average. Roughly every 4 years, based on the way the code is written, that reward goes down in half. And so if you look at, it's basically kind of the inflation rate of Bitcoin goes down in half.
So this is the difficulty rate of mining?
It's not the difficulty rate, it is the reward. So the difficulty rate continues to go up, but Bitcoin recalibrates so that it stays basically on this 10-minute kind of creation schedule. So every 4 years, the inflation rate goes down in half. So the next Bitcoin halving is estimated to be May 2020. So roughly a year from now. If you're an efficient market guy, you would say it's already priced in. Yet the last 2 Bitcoin halvings that have happened, after the Bitcoin price or the reward halved, the price of Bitcoin went up somewhere like 5 or 10x. So the question is it priced in? I don't think it's priced in, because when I talk to people who invest in Bitcoin, most of them haven't even heard of it. And so that if it's not priced in, the question is, when does it get priced in? When do people start thinking about talking about the Bitcoin halving event? My guess is it'll certainly be in 2019. People are not going to wait till 2020 to start talking about it. And I think a lot of what is starting to happen right now is kind of the smart money, the early Bitcoin folks know that that's going to be the narrative going into 2020. So they're getting involved in Bitcoin before it starts becoming the story as to why you want to get in Bitcoin before the halving happens in 2020.
So, in essence, your 12-month view is Bitcoin significantly higher. New highs yet?
I reluctantly say yes.
Yeah, it's a very volatile market. I'm not going to hold a gun to your head, right?
Yes.
But and what do you think? The final question: the Bitcoin gold thing begs the question: what do you think the final value of Bitcoin is in relation to gold?
Over what time frame?
Well, if you were to value, because I remember I wrote this article a long time ago about trying to value,
and you put $1 million of Bitcoin,
yeah,
right?
Does that still stand up?
Well, so it does, except for in that environment, $1 million doesn't really have much meaning because of the value of the dollar not being, from purchasing power perspective, $1 million today.
So then do you look at it as a ratio between gold and Bitcoin?
Well, yes, but I absolutely believe that over the long term, multi-decade, I just think that gold is, it's a fairly controversial position to have, but I just think gold has had its day, and I think that Bitcoin in particular is going to displace it over multiple decades. And that's I'm probably one of the only people that thinks that, but I do believe that this is the high probability that's going to happen.
Yeah, and I don't disagree, but I also think that you don't necessarily need to take that bet.
Of course,
you can take both.
Of course, absolutely.
Absolutely.
A
world of both gives you that balance. And I'm no particular gold bug. In fact, I'm much more bullish on cryptocurrency over time than I am on gold.
I think the problem, though, is taking the bet on both. Like you're hedging the Bitcoin bet, but I just think that if Bitcoin has that level of success, gold the gold will no longer serve its purpose, and ultimately, look, it's pretty for jewelry. It's replaceable from the electronics perspective. So if there's a perception that gold is not going to do what it's supposed to do in your portfolio, it's going to lose favor.
I'm just thinking, my God, the gold community is going to hate you. And we've got quite a few on Real Vision. It's going to make me laugh to look at the comment section. The outrage will be palpable.
So, all right. But I'm ready.
Yeah, good. Barry, thank you. As
Great
ever,
seeing you.
real pleasure to sit down with you. And let's see how this all plays out over the next coming year or so. And we'll get you back again soon.
Look forward to it. Thanks.
Brilliant. I've always said this about this whole space. It's what you don't know that's developing is where the really big opportunities lie. I thought Barry's views about speculation and the importance of it was something I hadn't really heard before. But I also thought that this whole move into the digitization space and the digital land space, I think that thing is something huge, and I can't yet get my head around what this is going to be as our virtual worlds and our digital worlds and our real worlds all cross over into something. Who's going to own that? How does it work? I mean, the internet is owned, so why can't those virtual worlds be owned in a number of different ways and monetized in a number of different ways? That is what all of this digital currency is leading to. It's leading to somewhere in the future. Who knows when that future lies or where it lies, but all I know, it's going to be a hell of an exciting journey.